Hey guys, Dave with Moniology here. Hope everyone is having a great weekend. Today is December 17, 2017, and this is the weekend market review for the weekend of December 16th and 17th. This is where we take a walk along the journey of various different sectors in the market, taking a look at various different time frames, daily, weekly, and monthly, to get a better perspective of what's going on in the market, where we've been, and where we're likely going. So let's have a look at what's taking place. Alright, so starting with the daily on the 10-year Treasury yield, it's been in consolidation for a while, so there's not much to see. I see the MACD starting to break down a little bit, so we might have some more downside on the 10-year Treasury yield in the short run, but for the time being, the greater story is it's just consolidating in the midst of a pretty big long-term breakout. Here again is a weekly perspective here. We had this breakout of the bullish flag, and now we're consolidating both above the middle Bollinger Band, the 50-week, and the 200-week moving average. So long as we're above those areas, the assumption is we're eventually going to break higher towards that 25 zone, which is equivalent to a 250 on the 10-year Treasury. On the monthly, also where we broke out of the bullish flag pattern here, now we're just consolidating from the upside of this range, and now again we're waiting to break above 25 for confirmation that the next move is towards 3. Now, taking a look at the gold daily, we had a very nice bounce as was expected as we tagged that lower Bollinger Band, and it also was support in previous areas here around 1240. And sure enough, we bounced, and now we're meeting some resistance around previous support zone of 1260. So it should be very interesting to see how it does around this area. There's also the middle Bollinger Band, the 50, and the 200-day moving average hovering above around 1269 and 1275 respectively. So if it can break that, then likely we're heading back towards 1300 and probably higher. But until it breaks that, the assumption is this is just a weak bounce. So we'll see. The MACDs are moving higher on the daily, so there's probably some more legs to this rally. Taking a look at the gold weekly, well, no surprise that we bounced here, and more importantly, we bounced off of this down trend line that we broke out of here in July of 17. So now we found some legs here, and we're slightly below the 50 and the 200 week moving average, about 1260 area. Again, if we break above that, that can be the impetus for a very nice move. Now, something that I'm seeing here is that we found support at this RSI level, that we found support in times past, and so that was very important that we bounced here, and hopefully for gold bulls that this bounce continues. Taking a look at the monthly, here again we're above this, or trying to break above this 5-year downtrend line here, and while it looked like we were breaking above it, now we're slightly below it. So long as we're above the 50 on the monthly monthly RSI here on gold, I think that this is going to continue to the upside, but it's pretty weak right now, so I'd be a little nervous if I were a gold bull, which technically we are, but so we are a little nervous in our trading strategy, but we'll see what happens here to determine that next big direction in gold. High yield is still kind of breaking down, and we're seeing signs of further weakness. The MACDs on the daily are now again firm, are about to cross below 0, and so our expectation is the probability is that we're moving to test that 200 mark, 200-day moving average around 36.14 on the J and K. On the weekly, we failed to break above 60, which was our high probability expectation that was going to be the case, and we're likely going to test the 50 on the weekly RSI to see whether this move is going to have some bounce in its step, or it's going to roll over and likely be the beginning of a major market downturn. So time will tell, but for the time being, expect J and K's RSI on the weekly to tag 50. And taking a look on the monthly, We're still above the 70 area, and so it's still very bullish from a monthly perspective, but if we break below it, that's when some of the most violent moves to the downside or upside do occur, so stay tuned. And again, the MACDs continue to curl lower, so it's definitely a very, very important development to keep an eye out for. Taking a look at crude oil, looks like it's setting up again to break above this 58 zone, so crude oil looks good to us. It's consolidating through time, which is important. I thought we had a chance of moving to the 53, possibly to the 50 area for this consolidation, but this is the best case scenario where you're just going up and down, and kind of getting rid of that overbought condition that we had over the last couple of weeks. Crude oil weekly, so we failed to break out above the 70 zone. Now we're retesting likely the 60 area, consolidating right above and right below the 200 moving average, and this is good because it's healthy and the middle Bollinger Band continues to rise. The 50-week moving average continues to rise, likely eventually breaks above the 200, and that will be further evidence to our assumption that gold, or rather oil, is likely heading higher in the coming 12 to 18 months. Crude oil monthly, again, inverse head and shoulders pattern, very, very powerful pattern. If it can break this neckline at 60, we think it will. The MACDs are very, very strong here, and it just got a lot of internal strength to move higher here towards eventually possibly a run towards 80 in oil, crude oil. NASDAQ daily, well, NASDAQ is breaking to new highs, but RSI is definitely not confirming, and so we're not believers in this last move, and we think that things might not continue going higher for much longer, but we shall see. NASDAQ weekly looks good, and NASDAQ monthly looks fantastic. It broke below this wedge a couple weeks ago. Now it's retesting from the downside. Remains to be seen if it can break above basically 7,000. That'll be a big psychological move to the upside. So we're going to be watching out for that. Russell daily, it's again breaking out of this 1530 zone. Looks like it might be ready to tag the 1600 area or 1550. But again, RSI is just not confirming this last bounce here. So I'm not really buying this rally. It might continue going higher, but it's kind of keeping us skeptical. And you're looking at the Russell monthly, it's still bullish, but again, if it breaks below that 70 area, it already broke below this bearish wedge. If it breaks lower, then that'll be further confirmation of downside ahead. S&P 500 looks good, still breaking to new highs, but the momentum is not matching previous highs here and here, so that's something to keep an eye out for. Look at this volume. I mean, that's insane. It's the largest volume on Friday. Perhaps we had some sort of rebalancing. I'm not sure why there's so much volume last week, but bottom line is it looks like it's biggest volume in about a year. Weekly chart looks good. Monthly chart looks very, very good. The momentum on the monthly is higher today than it was at any point in time, which is what you want to see because that's where prices are. The dollar started to bounce, but this is likely a weak bounce that's going to be met with stiff resistance on the 50 weekly RSI. So I expect further downside for the dollar. Again, here this might be a kind of a head and shoulders on momentum, if you will. So I expect to see the dollar below 90 in the not too distant future. And dollar monthly, if it can't break above the 50 on the monthly RSI, that'll confirm that the next target is 87.50. The VIX continues to make lower highs here, and so that's a very positive sign for market bulls. The weekly looks like it's still in this wedge pattern. Eventually it's going to break out, but how long, we don't know for certain. And the monthly continues to build that stair-step pattern on the MACDs towards breaking zero, but for the time being, it's being knocked down every time it tries to rally. So don't really understand why the VIX is not breaking out, but hey, the markets are making all-time highs. I guess volatility is indeed suppressed. Looking at the world markets on the daily, we're getting lower highs consistently, and that's not what you want to see if you're an emerging market bull. On the weekly chart, we broke below 70, so you got the emerging markets now leading the U.S. markets to the downside. That's not what you saw since 2016, and certainly 2017. That's a negative development here. And on the monthly, it makes sense why we're having this struggle, because this is also the RSI point where we broke down here in 2008, and that's typically where the most massive resistance levels are the points where the major breakdowns and breakouts have happened. So anyway, no surprise here that we're struggling, and ultimately if we can't break through this point, we likely see lower prices. Guys, thank you for watching this weekend market review. Have a great week and good luck trading.